Hey, folks. Good morning. Happy Monday. I hope everybody had an enjoyable weekend. We'll get going here. Um, Coming into uh, the end of August. We still have some earnings to get through this week. Nothing particularly notable today. Tomorrow is Home Depot, Klarna, Toll Brothers, the home builder. Wednesday, Target, Lowe's. Um, Thursday, Walmart, Ross stores, and then Friday, BJ's. So a big retail week, and we will get to that in due course as the week rolls on. I think the things in the headline for the show are largely Friday related activity. There was some stuff over the weekend to go ahead and report on. Futures at this moment are mixed. Nasdaq up about a 0.5%, Dow down a little bit, S&P up just a little bit. Gold sitting at 44.50 or so. Silver right around 65. 30 year. 30 year, 5.27, folks. When we get to 5.3, that's when people will really start to get concerned. At the same time, depending on your choice of measure, the US national debt, according to some, is above 40 trillion, but not according to everybody. And I don't think according to Elon Musk's usdebtclock.org. It is not over 40 trillion. It will get there by Labor Day, is the estimation. And on the macro front, and we'll talk about this, Japan, 10-year yield, highest level in 30 years. I think we're just going to continue to see those records broken. And it is important to focus on that because nothing is in a vacuum. And Japan, right now, what we have going on, other than cost of borrow in Japan going higher than many people can historically remember in their lives, um, you also have Japanese insurance companies facing an incredible amount of bond losses. The four largest life insurers, um, the four largest life insurers um, have unrealized losses of over 6 billion. That leaves their all in losses on bonds at this point close to 100 billion. And whether they're going to sell those bonds and whether they're going to sell their treasuries remains to be seen. The U.S., though, may have to get further and further involved. And the other thing I wanted to talk about at the outset, going back to the consumer and the reports that were get this week on retail, and we've spoken a bit on and off, and Dave Nikoski has highlighted the weakness in McDonald's. And I've highlighted the restructuring or the turnaround going on at Burger King. Well, Burger King has now officially overtaken Wendy's, which is in the throes of a go private transaction from Nelson Peltz and Trian. Um, Wendy's is now in the third spot for most ordered burger in America. Burger King has taken over and is serving as a real threat to McDonald's. Burger King has ratcheted up apparently quality of the Whopper. And there is just only so many spending dollars to go around in the fast food industry. And we're at that point where folks are going where they're going to get their best deal, their best menu, their best value. And so I think that this week's earnings out of the likes of Walmart, Target, Home Depot, Lowe's will further um, bifurcate the world. BJ's will get winners and losers out of this and see where you really have to fight hard, it seems, for the customer these days. Brandon, good morning. It seems that many mornings I have been starting with Brandon because of the news in the space. It's a breakneck speed. We have Stripe and Advent in talks to buy PayPal. And then we have Anthropic telling its investors, I assume in preparation for its October IPO, telling its investors that for Q2, its revenue was up 14 times versus the second quarter in 2025. That's a revenue figure of about 11.5 billion versus 787 million, and that's versus also a first quarter of 4.7 billion. So 787 a year ago, 4.7 billion a quarter ago, and now up to 11.5 billion. And I will turn to you on that. The other thing that we do need to discuss is Jane Street. Jane Street, the trading house that competes um, almost neck and neck with Citadel and just a few others, um, ratcheted or marked $15 billion of losses in July. First of all, it's its first monthly loss in a decade. Let that sink in. The first monthly loss for Jane Street in a decade, and its month was 15 billion of losses, largely tied to being right along with situational awareness and Leo on its positioning, and Citadel, its arch rival, took advantage of that situation, took advantage of situational awareness's position, and therefore also very much affected Jane Street's book for the month. Let's go ahead and pause there. Brandon, circle back, please, on PayPal. Circle back, please, on Anthropic. And if you'd like to comment on Jane Street, all yours as well.
Morning. Yeah. Hopefully everybody had a fantastic weekend. I'm excited that it's Monday and, we get to kick off another week and hopefully a great week for everybody. Yeah. So it is, there's tons of interesting stories throughout the weekend. In my world, I guess Anthropic would be the biggest one. As I've said many times on this space, Anthropic's growth is something that has never before been seen in history. It is just such a phenomenal company in the aspect of growth. And it's very it's almost weird to say that when you see the PR around Anthropic and when you see the situations around Anthropic and I think that you almost have to put this in terms of first mover advantage, which doesn't always last. I want people to maybe understand that first mover advantage doesn't always last. And I guess if I were to make a direct comparison, we could look at things like social media. and MySpace and the situation that happened with MySpace and then Facebook and Twitter, now X. And there's just been a ton. I mean, the hype around Anthropic is just absolutely incredible. Still, though, personally, I think that the company is going to have issues moving forward. We've talked about OpenAI and them gaining gaining ground on Anthropic. We've talked about the open weight models. We've talked about all that. So very interesting stuff there. We can get further into it if people want to, but Daria put out some interesting comments over the weekend that I think people should read and come up with their own opinion. I'm gonna leave my opinions out of that. Uh, then if we're going to talk about the PayPal and Stripe, it seems that PayPal had turned down Stripe's initial offer for acquisition and Advent, and they're still negotiating. They're still trying to get that done. I think that that's fantastic. Stripe made another big move over. I think we talked about it actually last week, but it became official that they decided to acquire Open Router for 7 billion, and that's a huge win. Again, this is a pretty newer startup, and we're seeing these acquisitions happen faster than ever. And to me, that's so exciting. Again, I'm a private markets guy, and I think that anytime you start seeing these acquisitions happen at fast pace, it's you can look at it worrying that it's a consolidation of the market, but I think the other way to look at it is that that capital is going to get redeployed, and we're going to see new startups. We're going to see new things come out of it. So I don't necessarily see it as a consolidation, but I see it as a great move. And something Carlos talked about in the past many times has been AI, stable coins being kind of the money that's going to be used for agents or AI. And I think that this actually plays pretty well into that. Stripe is pretty far down on the. If anybody knows what Stripe is, I think most of us do in here. It's pretty far down on the stack of things that happen once. It's the payment layer. It's the transaction. That's kind of the final move. Them buying Open Router moves them up that stack, gets them more data, gets them more information, and gets them more touch points. What a great move by Stripe. The only thing that makes me sad about it is Stripe's not a public company, so most people can't, trade on that news. But whether Stripe ever becomes a public company, who knows? And then as far as the Jane Street stuff, I think we did touch on that late last week, Friday, maybe a little bit. Just that's tough to see. The only thing I'll say on that or mention on it is Ken Griffin is like probably one of the greatest financial minds that we've ever seen, or players in the space, I'll say. And it makes the moves from him look, better than ever. But again, I'm going to say, as far as Leo goes and his situational awareness, I think that he's, well, not that I think he is still surviving. He's still doing great, and he still has a significant. To tie it back to the first story, he still has a significant portion of his fund into Anthropic, which I do believe will go ahead with their IPO at 2 trillion or maybe more, which is insane to say. But their growth is just something special. I don't love the company, wouldn't participate in it. I canceled my subscription a while ago. I won't give them, any of my dollars just because I have disagreements with them on just a personal level or whatever, just ideological disagreements with them. So they won't get any of my money. But that doesn't mean that they're a bad company. Their growth is, again, we've never seen growth like this in the history of a company before. So great story. I'll land the plane there.
Outstanding. Very helpful, Bryn. And the last point, I just want to emphasize to the audience about ideological and then your investment portfolio. Don't let your emotions go ahead and get you in trouble ever. Either overextending on a trade, avoiding a trade maybe, but certainly don't let it get the best of you. Eric, before I get to the hands, I just wanted to see if you had anything to add on the Anthropic numbers, just the growth. Good morning.
Good morning. So I just want to point out maybe a couple of things. Anthropic's growth has been really in the last year as they took over from ChatGPT and Grok. They really raised ahead and their model got better, which is why you have this really exponential growth. To Brandon's point about first mover advantage, you don't even need to look at the other spaces. In this AI space, OpenAI was the first mover. And look at how Anthropic passed it, right? And you have a lot of models coming. The battle is going to be fierce in the coming years. The bottleneck, look, I want everybody to understand why large language models are the type of AI that we are using right now. And there's a reason behind that. It's because it's scalable. It's one of the rare AI algorithm that when you add more scale, you actually get better results. And this is why you had this race for compute power over the last couple of years and still continuing. And that's why you have the DRAM prices going through the roof because, and all those data centers, because this is one algorithm that gets better as you get more compute. This is not always the case. And that's why this one has become popular because you do not need to refine so much more the algorithm. Uh, just with more compute, you're able to get more quality. And so this brings me to Anthropic. Anthropic does not control as much power in terms of compute as Google, as even XAI. We know that Anthropic is actually renting from XAI. And so that will be the bottleneck for Anthropic in the future. Will they be able to rent? I'm pretty sure all the others will, most of the other competitors will be happy to rent it out to them. But as their model gets pressured from Chinese models, from other American models, I don't think OpenAI or Grok are going to give up anytime soon. The revenues at some point, you have the exponential growth initially, which is the phase it is right now, past the 30, 40 billion per quarter, you need a really an adoption, massive adoption worldwide, and just on your model to be able to reach those kind of numbers. So I want people to be careful as when we go into the IPO, that yes, we might have a very hefty valuation, but it is not prone to stay there as if it was solid in stone. No, it is prone to move very rapidly as other models can compete. And they cannot go to a trillion per quarter, for example. There's just not the money on earth to do that, to justify it. Over time, it could. Over time, AI will definitely take over a lot of the things that we do every day, especially as it combines with robotics and starts replacing a lot of the human endeavors. And then you're definitely talking about trillions, literally, even per quarter, distributed through the industry. But I want everybody to keep this in mind when they make their choice, if and when the IPO comes out, which probably will, but let's see, because of all the things that we have talked about, all the things around Anthropic. And be careful with valuation. Usually there's a hype at the beginning of the IPO, but you need to stay on your game if you want to stay invested in it for the long term and keep very, very aware of the models one versus the others, which one are at which level, and the pricing of it. Because once you have two models which are almost identical to each other, if one is one third of the price, they're going to start taking over. It's just the nature of the market. Yeah. So just keep this in mind. Back to you, David.
Super. Thank you, Eric. David Nikoski, your hand first, and then to Carlo.
Yeah, I think, when you look at Anthropic and their growth, I mean, it is a super compelling story, but I think when the rubber meets the road, they've got to be profitable. From what I can find right now, they are showing that they, on an adjusted basis, they're positive, but they are subsidizing their heavy users. So it's really easy to grow a company if you're subsidizing people on the revenue side. The big question is where does it, when it does IPO, what is the actual numbers in terms of earnings? And I think that's the only, around any industry, there's these things get well overinflated and they can continue to work for a while, but
as that growth trajectory slows down, it'll be interesting to see if they can, turn this into, a significant profitability. I'd point out, like other times in the market, you take something like 3D printing, triple D, that thing went from $1 to $100 and back down to $2. So just keep in mind that, you can hit a wall too. And with competition out there, really, really priming the pump, what's amazing to me is that, I think the latecomers can capture a lot of market share when you're paying 500 and 600% more for memory year over year. Your ROI is pushed out further, right? And if this whole industry, starts to slow down, someone like an Apple can come into this market and take one of these companies out, just like during the telecom period. And, can it happen? Yes. Will it happen? I don't have a clue. But, anyone with a big cash pile, when these companies are hurting and the competition gets strong, that's what you see. Take the GLP-1 market right now. Every company is lowering their price on a monthly basis. I think we started, close to 12 or $1,500 a month, and you're seeing this fall down to, in some markets around the globe, less than $100, right? The more competition, you bring that price down. But these companies have so much invested with, vendor financing and from Nvidia, and the likes of this circle pattern, which is going to come to fruition and provide more light, in 6 months to a year from now. So, it's an exciting story. I think it's cool, but it just remember behavior. You know, this market, it's human behavior indicates what a stock is going to trade at, not fundamentals right now. And if that fundamental story sees any deterioration, we all know how this ends. So just bring it back to the room, and that's all I have to say on that.
Awesome. On that point, it's actually a natural point for me to mention, in terms of competition and moats. So Shane, the fast fashion company, is going to go public in Hong Kong. The company last raised money in 2022 at $100 billion valuation. The target on the Hong Kong IPO is at best at this point to get a $25 billion valuation out of the company. They're selling 8% of the stock in that. And the company posted a loss. I'm not saying that AI models and fast fashion are one and the same by any stretch. But that being said, to go back to Dave's point about the GLP ones, when the moat isn't deep or wide, and you're selling a commodity and it's a race to the bottom on pricing, like fast fashion, like GLP ones, and maybe like AI models, you don't know where it is all going to end, and especially if you're stuck in somewhat of an illiquid position. Carlo, you could talk about $40 million Ferraris and anything else, my friend.
Yeah. The Ferrari EV is a museum piece, not a serious retail item. And I'll leave it at that. Some interesting.
For those of you that don't know the
Yeah.
news, a one of one Ferrari Luce sold at auction for $40 million. It's the highest recorded ever Ferrari or car sold at auction. And on top of that, remember, we went ahead and destroyed Ferrari on the show, for that EV creation. And now it seems like, at least from the one sold, it'll be a collector's item. We'll see if the rest of them that are being sold are going to be collector items. Anyway,
Yeah, for
sorry.
sure. I think it's the first one that came off the factory line. So it confirms to me that people expect this to not be a retail success, and that first off the line is going to be a very, very rare thing to hold, kind of like holding the first DeLorean. So interesting. We had some interesting developments over the weekend, more along the lines of what is happening right now with the concerns over self-custody and et cetera. The Block reported that France confirmed hackers stole taxpayer data in a cyber attack that reportedly exposed nearly 678,000 people, including 386 individuals who had income of over 1 million euros. These types of continued leaks of taxpayer data that connects to cryptocurrency holdings exponentially increases the risk of wrench attacks. And that is certainly alarming for anyone who is in crypto and who is publicly doxxed for their holdings, especially in countries like France that have incredibly strict gun laws where you are pretty much at the mercy of others to protect you from these types of potential and very serious exploits. Another development in the realm of self-custody that I think is worth talking about is we had yet another provider that has leaked or released that there was a massive breach of their data, and that included customer information. SafePal crypto wallet. While your SafePal wallet seed phrase and private keys are secure, we identified a flaw in order tracking plugin that led to unauthorized access to information of a subset of customers. This affects nearly 40,000 customers who placed orders between March of 2025 and April of 2026. And the exposed information includes names, emails, shipping addresses, phone numbers, and purchase details. So ties back to what Gary and the panel were talking about last week, which is that some of these companies, and I don't use SafePal, I have no idea what the hell it is. To be honest, I hadn't heard of it till today. But in any event, it just exposes the fact that there are a lot of small providers who are experiencing, for whatever reason, massive data leaks, and that perhaps it would be better for the safety of self-custody to introduce a bigger player who can bring more robust security, as you talked about, David, last week. Another interesting development that I think we have to touch on is, and this one literally made me laugh out loud, it was reported over the weekend that Coinbase, who recently firmed up their arrangement with Circle to continue to pay out rewards, they posted that your money should be doing more for you. Now it can. Earn 6.5% APY rewards on your USDC for 1 month just by holding a balance, only on Coinbase. So in what I think is the biggest FU to the banks who fought the Clarity Act under this, what I honestly think is a bullshit narrative that they were doing this to protect deposit flight from community banks, they've actually contributed to another reason why there could potentially be deposit flight from community banks, because Coinbase is offering very aggressive yield on stable coins. And the Genius Act allows it until regulations change that. And the fact that they killed the Clarity Act, which was going to give some kind of a limitation on this, essentially shows you just, in my opinion, how clueless the banks are when it comes to understanding what stablecoins are about to do to not only community banks, but to the big banks. So that, to me, was probably the funniest thing that I saw over the weekend. As far as the crypto numbers, we still continue to chop downward. Bitcoin dropped under 63, or I should say under 64, currently sitting at 63.5 roughly. We're just going through a brutal chop right now, and hopefully something breaks here in the positive way, because remember, the two biggest regulatory agencies that control crypto, SEC and CFTC, are actively working at building their own regulatory regime and sort of front-running Congress, as we talked about. So if the Senate doesn't manage to get their shit together in September and actually pass the Clarity Act, I think the regulators are going to push forward The White House is hosting a meeting on Wednesday. Last point before I pass the mic. White House is hosting a meeting. President Trump will be there on Wednesday with major crypto players. So regardless of what Congress does, this train is leaving the station. And I don't think Senator Warren and her efforts to kill this bill are going to do anything to stop that train. And I still maintain that crypto, with the tokenization of everything, is going to become too big to fail. And even if legislation fails this session, I think it's going to become so big and entrenched in our financial systems that there's not going to be any way to turn it off. Back to you, David.
Thank you for the update, Carlo. To add on to Wednesday's White House meeting, that not only includes Trump, but it also includes the chairs of the SEC and the CFTC. And in addition to crypto executives, it includes prediction market executives, which to me, I understand how people relate them, and I understand why they're included because of the vagaries of regulation surrounding both asset classes. But beyond that, I think the asset classes are two very different ones. That being said, there is a bunch of popular press out over the weekend about how young people are taking to extremes when it comes to managing their funds. Some are managing for retirement from a very young age, hoarding as much cash as they possibly can. I get that. They're scared to death. Their entire world is unaffordable, and they don't know what to prepare for. So they're preparing for the worst. And then there's the other end of the spectrum, which is the YOLO attitude, which is, to hell. If I don't make it big, I might as well not make it at all. So that's the under the end of the spectrum, and I guess there is a fair amount of people that think the rotation was from crypto, and then we saw all the rotations throughout the stock market, and now there is a very heavy emphasis on prediction markets and sports betting amongst the youth. So maybe that's why they're being included. But in any event, just want
The,
to,
the other
yeah.
the other thing, David, is the buttons live right next to each other. So it's never been easier to, shift some money from your yields or stocks right into the old prediction market.
Absolutely. I mean, we've spoken at length about how there's going to be singular exchanges for everything. And there are already, right? In other words, you could do anything on Robinhood. But I think people over time will just get more used to having a one stop shop for trading anything and everything that they'd like to either invest in, speculate on, gamble with, whatever verb you want to use, depending on the likelihood of success. But yes, totally agree. Thank you for the comment, Dom. Lumi, good morning. Go over to you, please.
Yeah, thank you, David. Morning, everyone. I was going to talk about memory chips, and there's a small development on the memory chip side, which is kind of interesting. I've been following this kind of battle which has been going on in the memory chip, like subsection. It's like below the surface. And Netlist had a lawsuit against Samsung, MU, and all these other players. To name everyone just take a while. But Samsung took the initiative and they settled with Netlist and then purchased 10% of Netlist. Within a week, less than a week, a new lawsuit comes out from Netlist against MU. And this new lawsuit has teeth. I recommend everyone look into this because when Samsung settled, there was a reason. They took the initiative for a reason, I believe, in my personal opinion. And that is because with the MU lawsuit coming with the ITC, International Trade Commission, potentially, because MU produces their memory offshore, they could potentially stop MU's memory coming to America. That most likely won't happen. Most likely there'll be a settlement. But that initiative taken by Samsung is quite interesting. And this is the game which is being played out in memory right now, and all because of IP and patent infringement. And I think this is very fascinating because when you look at the most highest margin product in nearly any industry right now, which is memory. And you're seeing this all pan out. And then you see how important memory is for edge computing and for AI. It really gets, in my personal opinion, very interesting because this is like a battle for IP and for control of the memory system. Because if they can stop MU from legally bringing their products in for whatever reason, Samsung is going to have a great day. And I think this is on a high level, very, very strategic. But I don't know anything else. I'm going to leave this to David. You guys want to hear your opinions, but this is their memory fight of 2027, I think. This could be huge.
Okay, I am not sophisticated enough on the matter to give an opinion. Does anybody else want to chime in on this?
Yeah, is it? It sounds like though that they would if they did win, they might not turn Micron off. They just may have them pay a fee. Correct? I mean, that would be my assumption because they know that this is a very constrained market, and if they shut Micron down, you're going to have so many entrants like Nvidia, shoving $50 billion into, creating a plant because you know what memory prices are going to do. But I think it's highly likely that they have to pay, some type of fee associated with it to continue production. But that would be my guess.
100%. The royalty, this is where it gets really interesting because if they who has seen a deal where if you're suing someone, they then take 10% of your business? It's very rare. So Samsung really did take the initiative, and then I think they're really corporate lawyer wise, I think they're really gonna play hardball with MU, and the settlement will be at a point where MU will make it will cost them. I think it's going to cost them competitively one way or another, and that's because Samsung just took the initiative. If MU would have taken the initiative, Samsung would be in the same position right now which MU was in, and that's where it's really interesting about in a fight. Any kind of war, many books talk about taking the initiative. The Five Circles is a fighting book, which is very renowned martial arts, but also the Art of War. Um, um, has that in there as well. Taking initiative is so important. And when you see a company take the initiative, that to me is the most important thing when I'm assessing their capability of strategic thinking. Because MU has been, I mean, they're renowned for not really caring about this patent infringement. It's gone on for such a long time that it's going to be very interesting. I think that they're going to want their pound of flesh. And I think it's going to become quite a media piece in 2027 because memory shortage is not going to go away, and this is just going to create more scarcity of chips and higher marginable prices for producers, which is going to create more of a moat for these big players, in my opinion.
Yeah, how does the courts look at it if Samsung knew these patent infringements were happening for the last decade and they did nothing, and now when you have memory prices where they are, does anyone have a view on the court side of it? Like if you don't go after these companies when they're infringing and you've known it for a decade, how does the court view that?
I'm not
I've
a lawyer.
seen
Not a
what's
lawyer.
that?
This is what I was going to say. Not a
Yeah.
lawyer, but the court doesn't care as long as there's a resolution. So this is something which I've realized more and more. They don't really care about Micron. It's now coming up to like 7, 8, 10 years or something like that of infringements. They don't really care until it gets to a certain level. And as long as there's a resolution, then the system works very well. It just takes in the words of Kong, who is the CEO of Netlist, it's a good system, the American system. It just takes a long time to work. With the other company, RMBS, it took them 13 years. 13 years to get justice for all of the patent infringements, and look at them now. But now for Netlist, it only took 5 years, right? 5 or 6 years. It's been much quicker.
Yeah.
So I think the system is robust, but it just it as long as there's a resolution, that's what
Let me
really
uh,
you're
let
gonna
me
have 20
interject
million.
here. Le-
Lumi, you still with us?
Yeah, no,
Okay.
I was going to let
Can you hear
whoever
me?
was speaking.
Hello?
Yeah, Eric, we can
Can
hear
you
you.
guys hear me? Yeah, sorry. I wanted to interject here by and saying that RMBS, which is Rambus, the company that Lumi is talking about, that also has a lot of patent fights with Micron, with Samsung, with SK Hynix about certain specific components of the RAM and the interfaces of the RAM. Some of it has been viewed by the courts as Rambos destroyed some evidence, is trying to push. So there's a lot of maneuvering there, but a lot of those things have been settled in court. I think it's really about the smaller guys trying to get some money from the bigger guys, and the better solution would be just the bigger guys eating out the smaller ones. But then they fear the antitrust. As you know, right now the United States is doing a antitrust and collusion thing against SK Hynix, Samsung, and Micron. So there's a lot of litigation going around. They're small in magnitude, but they can drag things on and on because of the legislation, how it is done. And right now, the world needs memory and will continue to need memory. So anything that impedes that will be ultimately, the government will tell them, enough. So I think I wouldn't worry too much about that. Brandon, to you.
Well, I'm switching the conversation up a little bit. So if somebody has more intelligent things to say
Oh yeah,
on this
hang
topic,
on
please
one
go
second.
ahead.
I want to answer Dave Nikoski just for his own knowledge going forward. Dave, it's a great point you raise. That sort of defense, i.e., you slept on your rights, is called laches, Laches. And the Supreme, so the statute of limitations on patent infringement is 6 years, and the Supreme Court has said there is no laches defense when it comes to patent. So you can wait, you can sleep knowingly on your action as long as you take action within 6 years of the infringement. And if the infringement is ongoing, then your statute may continue to run, meaning you don't give up that right even if you sleep on it. You could wait until the company that you're targeting becomes a $2 trillion company, and then you could go after them. Now off to you, Brandon.
That's helpful. Thank you. That's exactly where I was going with it. I didn't. I took law many years ago, so it's been far too long.
You got it, Dave. My pleasure. Go ahead, Brandon.
Yeah, so there's something I wanted to bring up real quick about Rokana over that happened over the weekend, and it's got to be one of the funniest stories of the year. I mean, this may go down as one of the funniest stories of the year. So he's this California wealth tax they're trying to I guess impose on California residents. And maybe to give a little backstory on this, I think when people hear that private companies or founders are raising um, these huge rounds, like, oh, they raised a round at $1 billion valuation, et cetera, they all of a sudden think that the founders are billionaires or have $1 billion in the bank. And that's just not how this works at all. Like you do not have $1 billion in the bank. Actually, it's funny. So many of the founders I know that have gone on to raise huge rounds are still, living with roommates, or they're not homeowners, they're living with roommates. They're pretty much still, in a lot of cases doing the ramen diet. Just because you raise that money does not mean you have that money in your bank account. And so,
Brandon,
yeah.
before you get to the policy, can I just detail what the proposal is on
Yes,
Prop
please.
40? Okay. So is going to be voted upon on November 3rd. And I'll let you get to Rokana, and hopefully you'll also mention Mark Cuban, his responses to this. But the way this is going to work, okay, is it applies retroactively to anybody being individual or trust. That makes this particularly punitive, right? Not just people who were sloppy about their tax planning, even people who were smart about their tax planning. This goes back to anyone who resided or anything that resided in California as of January 1st, 2026. It's a one-time 5% net 5% tax on net worth. Who the hell knows how that's going to get calculated? I'll leave that to Brandon. Exceeding $1 billion. And it's due, this 5% tax is due with your 2027 tax filings. Of course, Brandon's going to talk about what the hell happens if you don't have liquidity. And you, if you can't come up with all the money at once, they will allow you to enter into an installment payment program over 5 years, but that's subject to a 7.5% annual deferral charge on top of your 5% levy. All right, Brandon, take it away, my friend.
Yeah, yeah, it's just hilarious because again, these founders do not have that money in the bank. It's like I can't explain to somebody how that works. It's very difficult. But like if you let's say you raise $100 million at a $1 billion valuation, your company, they don't have $100 million in the bank. There's these things called capital calls that happen from your VCs that they, over time, when you do a capital call, they'll give you that money. There's a lot of different ways that these are structured. That's one. Two, as the founder, you may only be paying you're reinvesting that money into the business. That money is meant to grow your business. You're not paying yourself that capital. You are not saying, oh, I raised $100 million, I'm worth $100 million. But according to this, that's how it would look. At $1 billion valuation, it actually would look like you may be a billionaire. You're not. You may be paying yourself $100,000 a year, $120,000 a year, whatever it may be. And in California, that's poverty wages. I mean, literally, that's considered poverty. And so, yeah, in California, and so, trying to tax these people is crazy. Here's what will happen: no investor will invest in a company in California. Done. You will never invest another dollar into a company that's based in California. So those
Explain
companies
why.
will,
Explain why you won't do that.
because these founders will then now have to pay themselves more money, which means less money that gets invested into the business. There's no other way around that. You're going to have to pay yourself more money. You're going to have to take more venture dollars and put it towards California government, California taxes, than you would that would typically be going into hiring more people, into employing more people, into expanding the business, growing the business, advertise, all the different things that grow a business. You would have to take that capital and instead just pay it straight to California, taxes, which is just absurdly mismanaged on its own anyways. So
Brandon backs many, many, many more people than I back. Okay. And he does it in the venture capital realm, and I do it in other operating business realms, right? The last thing you want, though, is your chief of command worrying about anything but the business. You want that person to be focused on that business, not have to worry about putting food on the table or paying Rokana's wealth tax or doing anything else. You want them to work really hard to actualize on their vision. And once you introduce this is where Mark Cuban went berserk. He had a Twitter fight over the weekend with Rokana. um, Mark made the point that Brandon just made. He said, I will not back anyone that's in California. I'm out. And I think a lot of people will go that route. And therefore, a lot of Californians that have great ideas will move to other states. And by the way, those people that probably are living on a shoestring and a dream, they are so mobile. They want to get the hell out of California because cost of living is so high. You've just given them another reason to leave. I mean, this is just, to me, this is insane. This is the most populist move policy. It's so bad. I don't know
yeah,
what the
listen,
good thinking
And
to,
about this
David
is.
and David and Brandon, to add to the hilarity, which the audience may or may not know, the irony that Rose District is in the heart of Silicon Valley just makes it like it has to be a simulation.
Yeah, so that's spot on. And so it is. It's hilarious. But to go even further, like guys, we're not done here yet. And I'm sorry, honest. I know we want to get to you. Everybody wants to hear the oil report, but we're not done here yet. This is so funny because so I'm in a bunch of different VC group chats or whatever. They're literally talking about now, we'll pay the future founders we invest in to move out of California. We'll pay their moving expenses. Almost like how when you go and do, you get a new job and they do relocation fees. VCs are now saying they'll pay founders to move out of California.
Your
That's what
your
everybody's talking about.
your cell phone plan will pay off your phone if you switch
Yeah,
carriers. Yeah.
yeah. That's how sad this is. And then just to add shit to the stew pot here. I'm going to read this word for word because you almost couldn't make it up. So Mark Cuban had asked, like, well, how's this going to work? Blah blah blah. They had their Twitter spat. Here's Ro Khanna's, response, word for word. Allow illiquid founders, which are all these founders, to pledge shares with a loan from the government to pay tax. The loan period is long, but not infinite, e.g., 10 years. The loan is non-resource, he meant non-recourse. At the end of the period, the loan is either paid back in cash or the government assumes the shares. So, off the rip, that's so ridiculous of a thing. The government's going to assume your shares. They're going to just we own your company now. But B, and here's the best part. Under tax law, satisfaction of non-recourse debt by surrender of collateral is treated as a sale of the collateral for the full amount of the debt, resulting in taxable gain to the borrower equal to the debt minus basis, even if the collateral is worthless. So if your company goes under, it fails, which happens the vast majority of the time. Overwhelmingly, most companies fail. That's just it's part of this game. If it fails, goes under, you still owe taxes on that full amount. You're in debt for life. Who's gonna say, I want to start a company in California where if I start this company, raise a bunch of money, do good for a few years, and then, after 5, 6 years, the company shuts down for whatever reason, it doesn't do great. I'm in debt for the rest of my life, worse than if I took out, student loan debt. Just it's absolutely absurd. And the fact, whoever pointed it out, I don't know because I can't see who the speakers are. Whoever pointed it out that this is in the heart of Silicon Valley, where the overwhelming majority of tech companies start and they grow, and this is who he's representing. Just you couldn't make this stuff up, and yeah, it's sad to see.
Yeah, that was Dom's point. And I'm going to actually reiterate the point, which is you can, by function of taking the loan from the government to pay for your tax, which you don't have the liquidity to pay, you may very well at the end, because your startup really never gets off the ground, that equity will effectively turn into debt because that equity will be worthless. The government loaned you a bunch of money to pay the tax. You still owe the government the money that they fronted you to pay the tax. And therefore, you have effectively you've given equity, or you've taken equity, and they have converted it into a debt obligation against you. And just to take it one step further, I mean, obviously that is really, I mean, it's counterintuitive. It's really punitive. Nobody would make that deal. No one in their right mind would make that deal. And then to take it one step further, what VC funds are going to want to be potentially partners, right, on an LP basis in this venture, right? You're saying to me, if the guy fails for whatever reason, and I can't get the equity value back, lo and behold, the government trumps all other VC funders and effectively owns the enterprise, the intellectual property that's left, whatever's left. I mean, it's really sick. It's totally, this was not well thought out, because there's no way that this ends well except in the case that the company goes to the moon, right? In all other situations, this is really, really bad. You're gonna have a
You
lot.
know, just David, real quick, because this is I want to emphasize that point that you just made. This is a populist talking point, and what's sad about this, like. If you're not involved in venture capital, if you're not involved in startup world or whatever, and you hear somebody raises $100 million, you immediately your assumption is, oh, this person's rich. That's a rich person. I want to, I don't care about rich people. It's all about rich people. The government's trying to, and this is our way of taxing the rich. That's immediately what people think about. And so if you don't know the actual details of it, that these founders are literally living in poverty for the attempt to build something great for the world, then you just think, oh yeah, this representative is fantastic. And if you're not on X or you're not in this space, listening to this space and listening to the actual intricacies of it, then you just think, that that's the way it is. Yeah, he's taxing the rich. And so he's making populist talking points to try and, further himself, further his career, but the damage it actually does is real. The people that get hurt from this are real. And so, I've been I'm not to get too political, but the Democrats have kind of been doing this for a number of years. And so when you wonder why so many VCs or so many people in startup world or so many people in finance go to, have gone to the Republican side or have started voting Republican, this is why it destroys the entire business model. But those businesses, it's not just, oh, I'm destroying businesses, I'm destroying rich people. Those are, those could be your children. That could be you that decides, I have a great idea, I want to start a business. And then those are the future public companies that many of you decide to go in and invest in when they do go public, or maybe if you're an angel investor, decide to invest in. So there's just a lot more. There's so many downstream impacts of this stuff that I think, if you have to almost talk about the political side of it. And it's unfortunate. And, I've been very public about my own opinions on the Democratic Party, between helping certain campaigns that ended up, just kind of going way off the rails. And when I've testified before Congress, it's been as a Republican witness, only because the Democrats were so insane that I had no choice. And so, and I say that as a black man, that it was in large part the Black Caucus that was trying to throw out some crazy ideas that it would hurt the black community if you could if they could invest in startups. And that just it was like they were so worried about their constituents being scammed. And it was like, so you're questioning the intelligence of black people in this country that they can't invest in startups because they would just, get scammed. And I found that so offensive. And that's why I ended up having to be the Republican witness for going and testifying before Congress. And so the Democratic Party is just, for whatever reason, I don't know if it's this DSA stuff, if it's this new stuff, they're just talking populist talking points that don't actually make sense to people when you break it down and get into the brass tacks of it. And so if you're wondering why so many people in finance or it's not or VC or whatever, it's not just to enrich themselves. It's because the shit doesn't make sense. And Ro Khanna's point is spot on about this. I mean, it literally shines a light on how idiotic they think about this stuff. And I don't know if it's malicious, or I don't know if it's with malicious intent, or if it's just because they want to further themselves. But that's what's going on here.
Economics professor that never started a business. Also, just to add on a layer, if you look at Ro Khanna's rise and his initial base support group, the guy raised money from like your rank and file of some of these bigger tech companies. So it's just another layer of misfortune in that his core support group that kind of, he really raised money amongst that group. If companies do move out of California and there's an exodus, like that whole constituency in Silicon Valley is going to take a hit.
Just before we get to Anas,
Wait
I
one
just
sec.
want to make one quick point. Okay, go ahead.
Let me just remind the audience. This is Proposition 40 in California. It's going to be voted on November 3rd, and we'll definitely cover it. Go ahead, Eric. please.
Yeah. And then to Anas, quick comment for the audience. This is not a normal way of socialism which works in other countries, so be careful. This to me sounds very borderline Mao Zedong, so be careful of that. When you go to a way that is totally destroy the ability to build a business, be very careful. Don't get fooled by it. This is a red flag, even a red alert, I would say. Regardless of your political affiliation, don't do socialism the wrong way. It will destroy your country. Go ahead, Anas. I'll yield the floor to you.
Good morning, everyone. Let me start with the good news. Chevron found oil and gas condensates offshore Angola, and this could be, from initial numbers, this could be very, very big. Angola needs that. However, we have serious problems with Angola because, for those who do not know, while they do have a currency in Angola, the Chinese renminbi basically is used in Angola as a second currency. So you can tell what's going on. So the existence of Chevron basically becomes important for the United States. Oil prices are slightly up. Brent is above 89. We've seen the little fluctuations in recent days on lack of news, but we have a serious problem with President Trump's statements. I don't know really where these things are going because, seriously, there is a huge concern here because Trump threatened to bomb Oman, not Iran, Oman, who is a U.S. ally, Israel ally, and I don't know what was going on. This is just on the border of crazy here. Be careful of what Bloomberg is writing about Saudi and United Arab Emirates oil exports. Most of the coverage, especially on UAE oil exports, basically is completely off. So be careful. But this leads us to a really important issue here, especially when it comes to Bloomberg. They are publishing location of ship-to-ship transfer in the near the Hormuz Strait of the UAE. These are via satellite, which means that the ships turned off their AIS, and Bloomberg basically is taking pictures from satellites basically and publishing them. So they are publishing the locations, and guess what? The IRGC are bombing those ships, are attacking them. So is this really? I don't know. I mean, why? You as a trader, you as an investor, you are not interested in the location of the oil tanker. So why they are publishing them? Are they helping the IRGC? Are they dumb enough basically to tell the IRGC where their ships are? Why Bloomberg basically and Reuters are telling the Houthis, oh, by the way, the tankers that are passing, the empty tankers that are passing today, they are signaling they are going to Suez Canal, but they are actually going to Saudi Arabia to load oil. Really? How crazy is that? Anyway, in the news, we've seen a couple of pieces of news that's kind of crazy. India, listen to this. India clean energy capacity surpasses fossil fuel capacity for the first time. This is we are really grown tired of such items of news like this, and the reason why, because the focus on capacity and capacity is irrelevant. So the headline is India's clean energy capacity surpasses fossil fuel. For those who are not familiar with this, for those who do not know, they wow, that's great. Now India is going full green and everything is going to be good in terms of quality of air and quality of water and etc. But what matters is actual generation. And about 70% of generation comes from coal. So when 70% of generation comes from coal and you publish a headline telling me, oh, capacity surpasses fossil fuel, you are literally misleading. Another piece of news that is important is that BP is a return to Venezuela with partners for a major offshore gas project. This is very important on several fronts because BP is doing this with XRG. XRG is the international arm of ADNOC, Abu Dhabi Oil Company. And the idea here is very simple. You have massive gas reserves in Venezuela and some in Guyana. And on the other side, you have major LNG terminals in Trinidad and Tobago. These are run by BP. And those LNG terminals basically were running on major gas field that is running dry. So the spare capacity of the project is massive. As you know, LNG projects are extremely costly. We are talking about 10, 15, 20 billion dollars. So here you have an LNG terminal with massive spare capacity. It's ready. On the other side, you have major gas deposits. The political atmosphere changed completely from the past. All you got to do just build a pipeline. And once you build the pipeline, every country basically will benefit, whether Venezuela or Guyana and Trinidad, and you can reduce the cost and you will end up with more LNG. And the world needs more LNG. So this is kind of a great project. At the same time, if you think about it from ADNOC or Abu Dhabi point of view, they are investing heavily overseas just in case of Hormuz closes again, they will have revenues coming from somewhere else. So it's a win-win for everyone. Again, in the news, India ONGC, that's the National Oil Company of India, received a U.S. license basically to work in Venezuela. Some of the media outlets, if you look at the headlines, they misunderstood the whole license, what it means. This company basically is just returning to its assets. It's been there for a long time. Just because of the embargo, because of the sanctions, they couldn't finish operations. So they are literally, this is nothing new. This is just returning to their assets in Venezuela. India's imports from Venezuela basically increasing, but they are still way lower than what they were before 2018. So they are back, and they wanted to negotiate with PDVSA on to get they want to operate the assets instead of being just part of the investors rather than just being on the side. They want to be the operators. So this is still wrong, kind of long way for it to finish because they have to go through the negotiations. But the main point here is it's a return to their assets. This is nothing new. There is not much news today when it comes to energy, but if there are any questions, I'll be happy to answer.
Super honest. Thank you very much for the update. Lumi, you had your hand up before. I wanted to get back to you.
It was just a little side joke. I was wondering if you could pledge the as collateral to that Californian wealth tax, a Ferrari Lucid, one of a kind, for 40 million, because I have a feeling that the collateral statement is going to be quite important in the future for this Californian crime syndicate. I mean, government.
Absolutely. You know, the fact that it's an electric vehicle will probably get a premium for purposes of valuation in California. We could go on and on about this. Carlo and I are going to pitch in. We're going to put all our stable coins straight into Ferrari Luces. We're going to corner the market. There will be no other Ferrari EV ever made. And that's it. We will control the market. The same way, you know, Soros broke the Bank of England, we will break the EV Ferrari trade, Carlo and I together. Paul, good morning. Hope you had an excellent weekend, sir. Anything to comment on so far in our conversation?
Yeah, I was just listening to the California. I mean, I think it's Brandon's been doing a good job. I mean, when I went to California the first time in 1993, and it was like almost like a paradise to me. And when I got out of the car, out of the airport, I just told the cab driver, I said, drive me to the Pacific Ocean. Just take me there. I want to see it. I've never seen it before. And it blew me away. There was along the 101, there's like ads, billboards for Intel and AMD. It's like crazy. It was like, and this is when the Silicon Valley was the Valley, not San Francisco. San Francisco, where you go and party. Silicon Valley was down, and there was the big software companies were really like Oracle. Like they had a massive complex, and I went to Oracle. I went to Trimble Navigation. I went to all these places like to visit friends and learn about the Valley. And it's definitely not that anymore. And to the extent you have this decentralization of tech ecosystems. I mean, it's hard to call it ecosystems, but we are a decentralized society, so you can have these tech ecosystems decentralized. There were times in the past when they tried to do like Colorado and Florida and New York, and they have, I think New York and Texas and now Miami have like the critical mass, but like California can't bring. I don't think they can bring it back. If they do this, they definitely won't be able to bring it back. And it just kind of points out like people have been working around it now for a year or two, and it's just not good. It's just kind of like what we have is we have 50 states that compete with each other. The best kind of system works and wins, and you can kind of go wherever you want to domestically easily, and then even internationally. I think that's the thing that we want to see is like the states that are most friendly to business are going to be the winners. And whether that's Florida, Texas, or California, it's probably not New York, but the states that are most friendly to business are going to be the ones that where I'm not going to tell like who's going to tell like a 19, 20-year-old kid that gets out of college to go to California. Like maybe not. Maybe you go to Florida, maybe you go to Texas, maybe you go to some other state that I'm not thinking of. Alabama, actually, if you talk to Huntsville has the highest ratio of PhDs per capita in the country. It's crazy. So if you look at like even the multifamily construction getting done down there, no one thinks that Huntsville is, they think Alabama, they think, maybe Hee Haw or something like that. Huntsville is like where a lot of major autonomous drone, autonomous mobile, water vehicles, autonomous planes are happening. Like that's where and autonomous robots are kind of being designed. Like it's pretty wild. People don't think of Alabama as a tech center, but it is now. So like the best state's gonna win. Like at California, it may be a hard lesson to learn. They've already learned it in the film business. Like it's 50%. Like the number of shooting days in LA it's 50% of what it was. Uh, 10 years ago, and it's not going to get any better, I don't think, and that's for different reasons, but also because Georgia and Yonkers, New York, and different parts of the country have opened their arms. New Jersey just opened a big I think Netflix kind of site. So like states are competing. I hope that the the governor of California, the local politicians, that they kind of see that like nice weather is great, but like you can always visit California for the nice weather. You can't. The businesses may have to move somewhere else.
Agreed, my friend. Thank you for that, Paul. All right, folks. It's Brandon, go ahead. Your hand.
Yeah, just to Paul's point there about different states competing for people, I think it's great. And Alabama, Huntsville is actually great. I have a friend that runs Redmont out there. They have a great VC fund, and they actually have a pretty strong VC ecosystem, but there's a lot of places that are popping up, like South Carolina, North Carolina, the Tech Triangle there, Greenville, South Carolina. There's so many places that are actually popping up, even here in Pittsburgh, where I am, that there is, different places competing for this money. It just seems like California is dropping the bag here, and I can't understand why. But it's been about, I don't know, 2 years since I've been to California last, and you know, the story I tell people is like, I remember I was at this great party at the Google Ventures office, and it was this great thing for VCs, fund managers, LPs. You know, there were some other great funds there. Just this great thing. I was way out of place. I didn't belong there, but I was there. And as I was walking out and leaving, and it was late night, you were literally stepping over homeless people on the stairs coming out of the Google Ventures office. And, you know, and that to me, it just showed where California was heading. It's like they are collecting all these tax dollars. They are doing all these things with, you know, taxes, and yet they are not solving the actual problems on the ground for the people that are there. And then people are getting priced out of California. You know, we've seen with these IPOs that are happening in Anthropic, people are getting priced out. I mean, you're paying, you know, 4 or 5 million for essentially what's a one bedroom home. And sorry, had to take a drag of the cigarette there for a second. What's happening is that they're who is going to be able to live in California whenever you've got these big, you know, these big companies IPOing the Anthropics, et cetera, of the world, and then it's a talent center. So that's what's been special about California and specifically Silicon Valley, San Francisco, the Gundo, et cetera, is that these people can, it's been a talent center. You recruited the best talent, that everybody was there. But that's spreading, and not only spreading because people are moving different places, but because of remote work. Like you can hire an engineer, great engineers that can live anywhere in the world. And so, you know, there's not a single founder that I talk to and say, oh, you got to move to California, you got to move to Silicon Valley, you got to move to San Francisco, et cetera. There's not a single one anymore. And now Roe is like, and it's not just Roe, it's all the politicians there. They're trying to completely destroy that. And what I think will end up being the straw that breaks the camel's back here is if Y Combinator, YC ends up deciding that, you know, they're getting out of San Francisco or they're getting out of California. And if that happens, then that ecosystem just completely collapses. There goes all the tax dollars. There goes everything that happens within that area. And I'm not saying that I've heard that that's a possibility, but I would keep an eye on that being a possibility very soon. And so, you know, here's where the finance comes into play here, and then I'll shut up. Is that if you're somebody that is like, you know, a commercial real estate person, or, you know, just a multifamily person or whatever, you got to start looking at where are the places that are attracting founders. You know, a few years ago, 2021, 2022, it was kind of Miami, Florida, because of Mayor Suarez. I think he did a great job starting to attract people there. Now, a big thing, a big push is like Austin, Texas. I think Elon helped kick that off, you know, with his message received when California said they didn't want his money, and he said, okay, you know, great, I'll get out of here, see you later. And he did. And I'm seeing a lot of, there's some tremendous funds in Austin, Texas, tremendous. But start, if you're looking at, if you're in the real estate world and you're looking at ways, you know, how do I continue to make money, what markets do I look at, those are kind of the places I would start looking at and start thinking about. If you're a founder, just forget California, forget San Francisco, forget all of it, go check out these other places. If you're somebody that's looking to get hired at one of these startups, or, you know, get into the tech world and make a decent salary for yourself, which a lot of the times, to go back to the tax situation, a lot of the times the founders are the least paid in the company. The talent gets paid more. I mean, I can't tell you the amount of times that I've seen that, where, you know, the engineers are making more than the actual founder, and that's because the founder believes in the company long term, has the equity, and has, you know, the majority of the equity in some cases, and so they're betting long term, and they pay their, you know, employees more than they're actually paying themselves. So again, I saw some comments that, you know, these are rich people, boo hoo for the rich people. They aren't rich. I'll promise you that starting a startup is not is not, you know, when you're in that grind, you're not a rich person. So yeah, I would just say that if you're, you know, looking to make money, look at these places for not just remote works, but start looking at locations. If you're talking to your kids that are going to college soon, or they're in college and they're looking for tech jobs, look at the places outside of California. The typical playbook that's worked in the past is not working now.
I was expecting a plug for Pittsburgh, but I'll plug Pittsburgh. There you go, Brandon. Okay, let's. It's getting late, so let's do this. Justin, then Lumi, then Eric, and we'll sign off for the day. Go ahead, Justin. Good morning.
Morning. Just a quick note on what Brandon said. I was talking to a very well-funded startup. I'm trying to hide who they are, but the people funding them, you would know who they are. Anyway, I was meeting with them in San Francisco a month or so ago, and I asked them, "Why do you have your main address in this like medium market, smaller town? Like, why is that your main office? Because it is their main office." And they're like, "Yeah, people don't trust San Francisco startups." Because that's where their other office was. So we maintain that headquarters, and that's still where we headquarter out of. We had a satellite office in San Francisco, but we still that's our main thing because people, when we're doing selling to organizations around the world, they would rather hear that we're from the Midwest or from a smaller medium market town. Because if we're from San Francisco, they get a little concerned. So I just thought that was interesting.
Thank
I
you.
don't just come up here and talk out of my butt, people. It's a real world, real life stuff.
Brandon's real. He's not making it up. Go ahead, Lumi.
Yeah, real quick, an $8 trillion company moved from California to Alabama, and it was Fannie and Freddie. I'll be damned if I don't mention it, David. So back to you.
Nice plug there, my friend. Eric, finish us up.
Gentlemen, thank you for that conversation. And I feel like somebody who lives in socialist countries, I need to add to the conversation. Because right now you have a socialist movement which is getting more and more popular in the United States. So it starts with some states, but it's going to grow countrywide. The reason for that is the massive money printing, which results in asset inflation and inflation that people cannot keep up with. And so you've seen it in New York, it started. You see it in California. They're becoming non-productive. There's two ways for the government to increase their revenues when they want to be socialist and give something to the people. Either they tax more or they print more. This is the two ways that government does it. It is very important that as this wave comes in, that you have the conversation, even with those you don't like who are on the socialist side and maybe extreme socialist side, that you have that discussion that if you go that route, you need to learn from the countries which have been able to sustain it for 50 plus years. What are the good policies that they were having, and what are the bad policies they're having? Because if going like Ro Khanna and even Zoran Mamdani and trying random things just for popularity, you may destroy your country. It is very important to understand that. And there are some things that indeed can be done relatively well to alleviate poverty, to alleviate suffering, to alleviate difficulties when a country is too much out of balance or has too much of an income gap. But it needs to be studied properly and analyzed properly, not just in a one liner, which is popular. And just like Brandon and the whole panel has been saying, look at the details because the devil's in the details. Be careful because politicians often they just want to get elected. They don't really care. Yeah, maybe one or two or three politicians will care or even have the intellectual ability to understand that, to analyze these other countries, to see what works and what doesn't work. Because if you don't do that, the odds are much higher that it will lead to a catastrophe rather than an improvement. So that's the analysis and the study needs to be done and to relate to your particular state because every state has a different situation, and that's very very important because there's many countries around the world which went south and collapsed because they hadn't done that properly and politics got in the way and drove voting. It was reactive voting because of the suffering that was happening and it led to a worse situation. So it is very very important to understand that, and because the United States has enough people who have access to information, who have the capability of debating stuff, you should do it before the hour is too late. There are some policies like for healthcare, for education that do work around the world, even for other things, for infrastructure particularly. Government can definitely invest in great infrastructure, which benefits everybody. but you got to take it seriously. Otherwise, I fear politicians will lead you astray. And on that note, ladies and gentlemen, I thank you very much for coming to the show. Follow other speakers. I am grateful to them every day for all the learning that I have from them. Thank you, gentlemen. And thank you to the audience for listening to us, asking us questions, giving us suggestions and whatnot every day.
The market's going to open in 3 minutes. We've lost a bunch of ground. Still in the green on the Nasdaq and the S&P, but just barely Dow down. And then we will discuss tomorrow. Breaking news: Google needs more money. Going to raise $5 billion in Australian bonds today. So the money printing or picking up train continues to go around the world. We'll be back with that tomorrow morning. Thank you, everybody, for joining. As Eric said, have a great day in the markets. We will see you bright and early, 8 a.m. tomorrow. Take care.